Good afternoon, everyone. This is Simon Tupman welcoming you to the September 2023 edition of Law Chat, which is brought to you monthly by Moore Markhams, accountants and business advisors offering specialist financial services for the legal profession. And it gives me great pleasure to welcome one of their directors here today, Sam Bassett, who joins us every year to share with us his perspectives from an accountant's point of view in terms of trends that may be impacting on small to mid-sized firms here in New Zealand. And typically these law chats are pretty well subscribed. Today is no exception either. So Sam, very warm welcome to you. Thanks for joining us.
Thank you, Simon, and thank you for having me on again. I think it's our third now, isn't it?
Yes, I think so. I think so. And a lot has happened in those last 3 years. So I'll be interested to get an update from you in terms of what you see as some of those trends. Now, as you know, in previous months, we've had guests on offering their views on a variety of topics from leadership to business development to delegation, technology, and so on. But today's very much, I guess, about the money, which is determined obviously by the amount of income that you generate, less the amount of costs that are hanging over your business. That's part of what we'll like to talk about. But just as a general question, perhaps if I could open it, in terms of what you're witnessing at the moment amongst smaller to mid-sized firms here in New Zealand, things did slow down for a while. Are they changing?
Yes, Simon, there's no doubt that the majority of firms that I work with are March balance date, not entirely, some December, some March. And the December last year balance date firms and March 23 firms, their results were slightly down on the previous year, the March 22, the 21-22 year. But when you delved into it, it had come off. Work the firms had been quieter quite noticeably, really, in the last 12 months. It was this time last year that firms started quietening down as a generalization, is what I've picked up. But I am picking up now just there are reports back from several of the firms I work with that particularly here in Auckland, we are seeing the property market starting to turn again. The property section and firms, the agreements are starting to come through. There is a sense of some more activity. And you've probably seen the articles from Tony Alexander that does various surveys and things, and he is predicting that we have really we've had the bottoming out of the property cycle, and so we are expecting more activity over the coming 12 months with small to medium-sized firms, particularly their property. And while a firm doesn't just entirely do property, as we know, leads to other issues. It's a start of other bits of legal work.
So fairly optimistic outlook by the sounds of things from your perspective anyway. Interestingly, I was over in Melbourne a couple of weeks ago, 3 weeks ago, in fact, for the ALCMA conference. And there were quite a few presentations at that conference on the impact that technology is having on firms. I'm interested to know your views as an accountant, the extent to which firms might be investing in IT, and to what extent that might have an impact on jobs at the secretarial support level.
That is alive and well, and I think since COVID there has been more investment by smaller firms in IT, not less. It really pushed ahead that move to the cloud, to 365, to electronic, being able to save work electronically and retrieve it and work remotely. All of that stuff, it really has moved down into the quite small firms. The 2-3 partner firms are all embracing that big time. And so yes, the IT spend has been up, and that efficiency of being able particularly for various standard bits of legal work, being able to efficiently have precedence and get your engagement letter out, get the bill out, all of that interaction with a client being as efficient as possible. Firms are embracing that.
Sam, are you able to say what level of investment as a percentage perhaps of turnover firms are throwing at this?
It's still reasonably modest. It's still at around the 5% of turnover. So I'd expect a firm that was turning over $2 million plus to be spending 80 to $100,000 or thereabouts in total IT cost. And that can sometimes be hard to calculate. You need to, because of how firms pay for their IT, it's often hidden in depreciation on laptops and actual computer gear. That's really a computer cost. It's then in the software as a service fees for all the various hosting of software these days, and then your tech support, etc. But it's usually around that 5%, 4 or 5% mark.
So since we started having these discussions on Law Chat a couple of years ago, of course, a lot has happened in this sector as a result of the pandemic. Can I ask you, from where we are in September 2023, what impact are you seeing as a result of all of this on culture and on staffing?
I think, and Simon, you've got up behind you the heart of practice, and thank you. I got a copy of your book and read it, and there's that covers in it. I think it really is a topical issue because I've certainly noticed in our firm, and we're a CA firm, but also with the firms I work with, that the 30-year-olds of today will not tolerate things that went on even 4 or 5 years ago in the pre-COVID environment, let alone sort of practices of how firms operated 10 or 15 years ago. I mean, there is that really is my view that's coming through loud and clear, that successful firms are working on things like getting their mission statement right, getting their culture values and working with their team about that, having a survey of their clients and their staff to work out what's important to their clients, their stakeholders, what are the key things and are they addressing them? Because there is a shortage of another trend that won't be a surprise to anyone listening is shortage of staffing of firms. I mean, that has come back with a vengeance, and so that is a key issue. And the people coming to a firm, they are quite sophisticated now. They are wanting to understand what the flexible working arrangements are of the firm, what the IT is like in the firm, what the firm's, but more than that, they're wanting to know, what's the firm's induction process for new team members, what's what are the firm's stated values and culture. They will be looking at that. What's the diversity of the partner mix or the senior management mix in the firm? All sorts of issues that when I was coming through 25 years ago, completely different from what I was looking at. And COVID has, I believe, has sped up some of that. I mean, they are trends that have been well underway, but I'm seeing that in the small to medium-sized firms that I work with.
Have you seen any change in the role of the general practice manager, or in terms of either the growth in numbers or the increase in terms of mandate and authority?
Yes, I certainly am I seeing a change? Maybe if there is a change, it is more authority, not less. But it's always a real hard one, particularly for small to medium-sized firms where you're dealing with 4 or 5 owners of a legal business. They are trained lawyers. They own the place. And then you have this empowered general manager or practice manager, and it is empowering them and backing them as much as possible, because the team will pick up immediately if really there is a disconnect between the partner group and the practice manager. And that's the worst situation, as we know, that you can get, because then you're setting that person up to fail. You've got to sort of agree with them and work on what the key items are of change that the partner group wants across the firm, and then that the general manager or practice manager is empowered to really push that through. And the partners, I certainly in my consulting with the legal sector, wherever possible, up to you have to come in behind and back up the practice manager.
Can we go back to the issue of staffing I was referring to, and you talked about how discerning the new generation are, the emerging leaders, if you like, in terms of what they're expecting from their employers. Is this having an impact on occupancy costs in firms? In other words, a lot of office space is being empty because people are working from home or virtually. Are there any implications, financial implications for firms in terms of the working virtually?
Yeah, and look, it's been something even pre-COVID. I've had a mantra that I think a lot of legal firms burn too much money on occupancy cost. And my mantra is that if you're spending more than 5% of turnover on occupancy cost, so that's $50,000 per $1 million of turnover. So a $4 million firm should be able to house themselves for $200,000. And if they're not, and I'm talking, these are Auckland firms I'm working with. These are central city firm. That same percentage can work for suburban city fringe firms and central city firms. There's no excuse for it to rise, by the way, because the fees in a central city firm should be rising proportionately. As soon as you start spending more than that, you are really just burning surplus cash, in my view. And look, with the surveys that I have looked at with firms that have surveyed their clients want interaction and direct. They want to be able to contact senior solicitors and partners and get advice quickly and efficiently. They are not obsessed about, and these are even corporate commercial clients. They are not obsessed about the size of the boardroom or the waiting room or how fancy the premises are. And I think a lot of firms are guilty of, particularly in this environment of flexible working spaces, where small floor plates but smart is what I'm seeing. That you actually, a clever firm, that a boutique or medium-sized firm of say 20 people should be able to house themselves in relatively small floor space with people coming and going in a modern environment, with small little breakout room, open plan, but with some pods and very small little offices where a door can be closed for doing like what we're doing now, with a Teams call and meeting with clients. Another key thing post-COVID I'm seeing is that some of the medium-sized firms that had quite a geared model, they have found it tough over the last 12 months. And if you had, that makes sense really, if you had a whole pile of legal execs that were doing a whole lot of conveyancing work and things for you, and other general or lower salaried legal staff doing a whole lot of basic legal work for you, some of that work has dried up. And of course, gearing can work against you when things get quiet. And it's actually led me to question, because I think it's more than just COVID or just this current economic environment. I see that the most successful medium-sized firms that I work with are not highly geared firms generally. When I really look at it, they might be a firm of 3 to 5 equity partners, with then 2 senior legal staff along with the partners. So there's sort of 3 senior legal people doing with some specialization and higher level legal work, getting good chargeability with the support of a pretty small admin team and using IT effectively. And the profit that drops out of that model is surprisingly good. And I sort of do, it has led me myself, because look, gearing, if it's organized and done well, can absolutely is important. And there still needs to be gearing in a legal firm, but it can be more modest, I think, in the modern environment than it once was. I mean, we've certainly seen that in the accounting profession. There is less gearing. We traditionally have had more gearing, and that's coming back for us as well.
Interesting. At a time probably when a lot of people have looked to gear more, but it sounds like it's fairly cyclical. One thing that maybe isn't quite so cyclical, because we've talked about it in each of the last two law chats over the last couple of years, is the issue of succession. And it's something that, I think, from my experience anyways, is still of concern to people of our vintage who might be looking to pass the baton. And certainly as in terms of my work this year, I've done quite a bit of work with emerging leaders, senior associates who might be looking to take the next stage in their career, but are perhaps a little bit hesitant because they're unclear about what is expected of them to step up, or they're unclear about the risks and responsibilities associated with being either an equity or non-equity partner. Can I ask your views from your experience, whether you think firms are prepared here for passing the baton?
It's succession is alive and well. It really is heavily underway, and that's the demographics. Of course, there are a lot of practitioners that are now in their early, mid, or late 60s plus that really are needing to succession. So I mean, there's just a huge amount of that going on out there. Are firms good with it? I think they could be better. I remember, Simon, we should dust off the course we did 5 years or so ago on passing the baton, and the I remember we did a really good course with a firm in Christchurch on it was their up and comers and the things that they, and we just covered also various topics of these are the types of things managing because often you've got these senior staff solicitors, but it's also all those other aspects of taking the next step to being around the partners table and chasing debtors and keeping your whip and under control, understanding the cash flow and the cash cycle of the firm. You're business owners, and taking that next step is really important. I have seen a trend of, and look, I have been part of it and really encouraging with small to medium-sized firms over many years now to bring through non-equity partners. And I still, look, there's a place for that, and that has worked really successfully generally with firms. But I have seen a trend of late where some firms are actually taking it, and I'm supportive of it, where instead of having a mix of equity partners and non-equity partners, a 5 or 6 partner firm is actually saying, no, let's actually just have everyone equity partners, and let's just work out the equity points. So some might have 30 equity points, and some might have 20 equity points. It's the old tried and true lockstep method in its own way. And of course, the low equity point amount is really what the fixed rate non-equity partner was starting on. But it does have some benefits, and I have worked successfully with a couple of firms that have done that, because the new partners are from day one, albeit on a reduced equity share, and sometimes quite modest equity share, but right from day one, they are on the balance sheet. They are EPs around the table, and there's buy-in, I suppose, and there is true succession in its own way happening on the firm's balance sheet, and so I think that is that has been successful in a couple of the firms I've worked with, and I would encourage it really. I quite like the concept of rejuvenating your partner group and actually just saying, no, we're all equity partners, but you just quite upfront work through what the equity amounts are. And it's not going back to that old seniority system where you would spend 1 year on this percentage and then you automatically went to the next percentage, etc. Sometimes they're saying, hey, come in, what you would, instead of a non-equity partner, you're coming in as a 20 points partner or whatever the case may be. And then based on various criteria over time, you have to be upfront about that you are not, you're way better to under promise and over deliver, or you mustn't get caught as a firm in promising too much with that process, but it works quite well. So that's something that I've noticed, and it's alive and well. There is still, look, there's a number of goodwill firms. People say, oh, goodwill is dead. Well, yes, goodwill should never be overstated in a professional service business. But absolutely, if it's a well-run, and you tick off the things, the IT, it's established, the mix, the culture, the all sorts of things are right. And the key one is that there is superior profits to equity owners, whether they're shareholders or partners in that firm, then there is a justification for a goodwill amount to be paid. And when younger practitioners will come to me with a proposal in such a firm, I'll often look at it and say, absolutely, it stacks up that goodwill is paid. But I also see plenty of examples, and which is problematic with succession, where where the partner group at some stage has sort of thought, oh, we'll book a nice fat goodwill figure on the firm's balance sheet and credit our current account and borrow some money from the bank and take it, and then it sort of sits there on the balance sheet, and quite often I take an immediate look at that and say, hey, that goodwill balance on your balance sheet is overvalued, which means that the shareholder current accounts are overvalued, and there needs to be an adjustment done here in order to get an orderly succession working financially for a firm in that position.
Sam, can I ask, does incorporation affect any of this? Are there advantages for small to mid-sized firms becoming incorporated?
Look, the vast majority of new firms, and I think the Law Society stats show this, tend to incorporate. But there was a flurry last year of existing firms incorporating, seeking to get some level of tax advantage. IRD's view, of course, is that the vast majority of business profits still have to be allocated out to the shareholders and be taxed at the 39% tax rate. But there was some precedent that sort of 30-odd% maybe a firm profit could be retained by the company and then therefore be paid out as dividends to a trustee shareholder. So there was a tax advantage, and there is currently a tax advantage for an incorporated law firm. But as everyone's probably aware, that is coming to an end at the end of this financial year. So there is no great tax advantages to incorporating, but it is a more modern structure, I think, is the general feeling. And so that does work. But I have to say, and maybe I have to say that I deal with a lot of incorporated smaller firms that are still really running a partnership model, just trying to force it into the incorporated company. But yeah, so I don't expect, and I have just incorporating a firm is not going to immediately make it more business-like or any of those things.
I wonder if I could ask you, I know in previous years you have been responsible for conducting a firm benchmarking, financial benchmarking survey amongst Auckland firms. I understand you are going to be embarking on another survey, but this time it's going to incorporate or involve rather firms throughout New Zealand. Can you tell us a little bit about that?
Oh yes, thank you, Simon. Yes, I am helping to Altma. So Altma, which you're familiar with, has asked me to assist them with doing their financial benchmarking survey, and it's going to be a New Zealand-wide survey this year rather than just an Auckland survey that I traditionally did. And it's going to be available to Altma members, but also other law firms. So I encourage anyone listening, and I'm certainly going to be, legal contacts that I have, I will be encouraging to participate in the survey. It is going to be at no cost. If you participate, you'll get a copy of the report, and so it's not just restricted to Altma members. And it's going to be New Zealand wide, and we've currently just finished working on the questionnaire for that. That will be circulated, I'm expecting, in the next couple of weeks, with the report that I write available latest early November. So that's the timetable. So look out for that, Simon.
So if firms want to participate, how's the best way for them to get in touch with you?
I think, yes, if they can flick me an email or drop me a line, I will make sure that they're included in the mail out for we're going to be using SurveyMonkey to do the survey. And then I'm going to be writing the report with Altma and speaking to it. And I think it's going to be neat to have a New Zealand-wide survey and to have more participants than my survey had. So I'm really looking forward to working with Altma on it this year.
What's the email address?
Sam.Bassett, Bassett, at Markhams, markhams.co.nz.
Good stuff. All right. Well, those people who are listening in, if they want to participate, do get in touch with Sam. We've got about another 3 minutes to go. I don't know if anyone out there has a question for Sam. There are quite a few people tuned in today. But in the absence of that, I'm probably going to wind this up with a general question to you and say, look, are there a few sins that small to mid-sized firms are still committing that, if you were advising them, say, listen, stop doing this or stop doing that? And conversely, here are some things that perhaps you should be doing that would help improve your financial performance.
Look, there's a few things they're doing. They're spending too much on occupancy costs. They're often not spending enough on IT. IT is a good spend. I don't tell firms off for spending too much on IT. And then modernize your firm. Just silly things. But I was dealing with a firm last week, and they're spending $1,000 a month on their off-site storage of old records. And I said, look, I know it's basic, but you need to actually get your admin team to go through that with a dose of salt and turn it into $300 a month, and then in 12 months' time or 2 years' time, it'll be $0 a month. And I know it's not hugely exciting in dollars, but it's still just no new law firm setting up to compete with that firm would be incurring such a cost. You see, a new modern firm just wouldn't have that sort of thing. The other one is you must sit round the table and agree retirement ages and the succession process for a firm and sign up a partnership or a shareholders agreement. That is really important. And look, no shareholders or partnership agreement is perfect, but it's way better than not having one.
And is there a particular retirement age that you recommend?
I still I still think that 65 to come out of equity, if not earlier, is appropriate. I really do. And I'm not saying that I deal with a number of firms where absolutely there's 67, 68-year-olds that are contributing a lot to the firm, but they should be doing that wearing a consultant stroke special counsel hat, not a partner with an equity stake in the firm.
Emily Morrow will be telling me off for using that retirement word. The one she that likes is reimagination, I think, or something along those lines. But reinvention. reinvention maybe, but yeah, retirement is a bit of a dirty word when it comes to succession. But there we are. Look, our time is up. It's been good to talk with you again. Thanks very much for sharing your thoughts this afternoon on Law Chat, and I look forward to catching up with you again soon.
Thank you, Simon. Really
Bye,
enjoyed it.
everyone. We'll be back next month. Bye bye now.